Hello, everybody, and welcome to another episode of Unconventional Forex Trading channel. I've been out for a while. I'm not making lots of videos since a while, but basically because there's nothing more to say in regards to Forex. I expressed in my previous videos, and you should watch them if you're interested to this kind of topic. So, trying to read the markets using math by watching my other webinars in this channel, and but it's just to make a point of the things. Even because by reading the emails that I'm receiving and talking with you, with some of you via Skype, a lot of confusion emerged in regards to the actual setup that the majority of traders have when approaching to Forex. Forex is not an exact science, and because of this requires an approach that allows to read the markets properly and also requires some study and discipline when executing the trades, when closing the trades. So basically, I would like to show you today something that is related to this. As you can see, I'm not trading now. Today is Friday. It's just the 18th of October 2019. So I'm sure that most of you will check also what they see here by reading their own charts. As usual, I am running my UFO Expert Advisor in order to identify the possible trends and the strength and the weakness of the currencies, and trading coherently with that. But today is a specific day on which I made some trades in the morning, and I will show you in a minute. But I made something different because I've received different requests to show how this technique develops through time. And also another topic that was very asked many times was about how to build a profitable strategy, which in my opinion, and not only in my opinion, is made by two major elements. One regards the analysis of the market that originates the ideas of trading and the strategy of positioning the trade and placing the orders. And the other part is made by some money and risk management, which is very crucial at a certain point. So let's go first of all by showing you what I did. I basically copied my trades from my real account into a demo account for about 2 weeks, as I wanted to mirror the trades that I made. Of course, in this case, I didn't use any specific money management. It was necessary to go to a procedure of testing the strategy and testing the analysis of the markets by not using any kind of money management. And I will explain in a minute why I'm saying this. Of course, I'm not saying that money management is not important, it's crucial, but part of the money management has to be embedded in the analysis that we do, because a good analysis of the markets indeed lowers the risk and creates a simplified and more effective money management. And let's go directly to the point. And in regards to this account, which you can see the number here, even if it's very little, I created a sequence of temporary, let's say, reports in the days of what I traded, starting from the 8th of October 2019. Okay, so you can see here the very first trades have been done starting on the 8th of October, so 10 days ago. Okay, so this was the first bunch of trades, and as you can see, these were trades that were running, so they were open trades, so at the very beginning with some positive, some negative. Okay, by going further, now I will make a brief storytelling about this, and then I will go to the topic. So this was the first day. Okay, I started making these trades, and then let's go to the next day. This is of course the end of the day. Other than this, I had other elements of analysis that pushed me to open positions that are stated here, and of course it's up to you to verify every single element of the symbols that I use, the currency pairs that I used, and the level of price and the time, so you can check everything to see that everything is clear and transparent. Of course, instead of reading this boring list, it's better to see the development that led me, even with some negative positions, of course, because the more you trade, the more it's possible that something is going wrong. It's not only always the case of bad analysis, but I think you can agree with me that in the last months we are observing a forex market that it's very ranging and very hard to predict because of the many situations, economic and political situations that are occurring all over the world. Think about Trump and the USA, the Brexit, the Europe issue, the Asian facts that are correlating with the other side of the planet. And this results in a lot of ranging days, stagnant ranging days, where it's very hard to predict the movements, or at least it's very hard to find a trend that can be consistent and constant for more days. What I always explain to you and made a point on this is that in my opinion the best way to trade forex is by doing intraday trading. Swing trading, it's possible, I made it also as well for certain days, but let's say like 5%. 95% of my trading is day trading. Every day markets reset, create a new setup, create a new balance between euro and dollar, which are the most liquid currencies that we have, and builds all the system and the movement of the other pairs accordingly to this. So by having an approach of day trade, intraday trading, we get more chances to enter the market, exit the market, stay out from possible gaps of the next day, and stay out of possible issues that create undesired movements of the pairs. So this was the 8th of October, okay, and I raised by trading always one lot, and this is not part of the money management, it's just to have a straightforward one position, but of course the lot size has to be coherent and designed with the balance and that we have. I cannot trade one lot, and I'm not suggesting to trade one lot with a very small balance, and this is money management. And as I said, in this case there's no money management, it's just pure analysis and trading, which gives us some information that regards the quality of the analysis. A good analysis lowers the risk itself, and this is a crucial point, at least from my point of view and from my operativity. I prefer to have money management aside with a good analysis that lowers my risk. And in order to understand how much the risk is lowered by an analysis and normal trading activity without stop loss or take profit, it's just to place the orders, trade and close the orders. Very simple. But there's always also that part, the money management, that is very crucial to optimize a good analysis. Going further, on the 9th of October, the day after, so what we see here is the historical trading history and positioning. I went to another step. I made some losses and I made some gains, and I raised my balance to 4,000 units from the 2,000 initial of the day before. Okay. Then we got the 10th of October. and this is always the same trading account. Okay. This one from 4,000, I went to 4,070, 4,700, so not that much in that day. Then the 11th of October, I made another profit of 6,000. So from the initial balance of 10,000, I went to 12, 14, 14, 16, then the 15th of October, as you can see, there are many trades, of course, running, even more. I got the big spike. I hit the day where markets were really trending, and I raised my profit to 30,000. So a balance of 40,000 units. Then the 16th of October, and I'm showing this to show you that even if you have some negative positions, it doesn't matter. The moment you are having also profitable positions that are even stronger. Okay, so in this day I take a snapshot of the new trades that I was running, and as you may notice, they were all in a positive setup. Not the euro dollar that was against me, but I raised 40 plus this one, more 3,000. So that capital, that was the 17th of October, has grown of other 7,000 units, so to raise the 47,000 units. Okay, and finally today, which is the 18th of October 2019, in the morning I placed some orders here, these ones. Let's see, these ones. Okay, in the morning, that in order to bring my initial balance of 10,000 to 50,000. So this is a history of 2 weeks, of course not trading the Saturday and the Sunday, and not trading certain days where markets were choppy and not significantly clear to trade. But in the overall, I got a very positive ending of my trading activity. This has to be crucial because this shows me that my analysis of the markets by using math is already a kind of more risky proof, more it contains already a sort of shield from at least a big part of the risks that normally when we trade we are facing. These results, of course, are just a part of the thing. Let me go into the detail and open. Okay. Okay, we got it. So what makes a strategy profitable? There are two factors. First, market analysis. In my case, I'm using math. By saying that I'm using math, despite the fact that you can go and check and watch the dozens of videos that I already published in regards to this topic, is basically measuring the 28 currency pairs, getting the 8 currencies, determining weak and strong currencies, and combining them to placing orders. Okay, this is the straightforward process and requires a bit of time every day. And of course, if you do that with any kind of tool, without any kind of tool, it can be very exhausting and a stress moment. But you need some tools. In this case, I have my UFO Expert Advisor running on MT4, and my Excel spreadsheets, which are giving me the market performance of every day. Then there is another element, which is the money risk management. And this is crucial for what we're going to do, because we take in consideration our balance, we size the lots of the trades of the orders we're placing, and we take in consideration that we take profit the moment this scenario changes. So the moment I see that uh, a new currency becomes weak or another currency becomes strong in place of the previous one, I close the orders and take profit, no matter what the profit is. And regard the stop loss, that I'm not using stop loss in the traditional way. Stop loss is a kind of factor which in a real account has to be in the order of the 2% of my balance. So if my trade is wrong or is generating a loss that goes more than the 2%, sometimes can be 3%, but let's stay on the fact of 2% of my balance, I close the trades and restart. This way, losses are controlled and gains are in function of the trend of the market of that day. Okay. It seems very a simplistic way to approach, but it's so here because in a market analysis, basically, you have to determine if something is going up or down, and you have to combine more elements of the currency pairs together in a kind of equation, but for all of them you have only to decide if it's going up or if it's going down. And in the other case, the second part of the good strategy is to control the risk and control the money flow that you are managing at that moment. If in your case you are wondering how to build your own strategy that can make you rich or somehow in profit, always test first your idea of analysis, of course on a demo account, not on a real account, and without any money management. This way you will know the quality of your analysis. A good analysis, let's say the perfect analysis, does not require any money management. But we know that in the real world it's not like this. The perfect analysis does not exist. Instead, that can be a very good analysis that then can be improved, enhanced by having a money management attitude. If your analysis is weak or is generating more losses than profit, even if you have a good money management, you will not go very far from where you are. But if you put your focus on analyze properly the markets and put your discipline into a kind of, I don't know, be like a robot, always reply the same and the same and the same operations every day, and you notice that you are generating profit despite the money management, then this first factor of a profitable strategy is achieved. Once you have achieved this, then you focus on applying the money management rules, which are very simple, and you perform with more accuracy your trading activity. This is the suggestion that I am thinking about giving you, because a lot of you are writing me saying, pass me your Excel, send me your UFO, whatever. Guys, this stuff took 4 or 5 years of my life, and is something that cannot be given for free. But I really do trust you on the fact that by watching my webinars, on which I speak about the approach to the forex markets using math, can give you substantial information to do your own job and your own homeworks, and be aware of what you're doing in the forex market. But the important thing is that you have clear in mind that it's not only the money management that makes you richer, but it's also good analysis of the markets and knowing what's going on, and knowing the time that it's good to enter the markets, and the other times where to stay out and wait for a good situation. And it's not always that you have to trade all the time. Sometimes you better sit and watch, or doing something else and wait for another moment. I bet you can agree with me that in the last weeks or months, forex markets are even more harder to predict because of all the exogenous factors that are running into the world, and banks and central banks that are deciding new monetary policies or whatever. So we are in the middle of a storm, and we have to be very careful and acting with knowledge and discipline if we want to be successful in trading. Even because it's not easy, otherwise we would be all rich. And this is not happening at the moment, I think. So, in my case, I worked very hard to create this expert advisor, which is the UFO. And for those who are following me since a while, you know that it's basically this stuff that tells me the strength and the weakness of the currencies, tells me the percentage of my balance that I'm risking, and when this element goes to -2, -3%, I close the trades, and if it goes above, there's no problem. And of course, I have this kind of filter that not always is the filter that I'm using, in the sense that once I have these suggestions from this analysis, then I go and check the charts. For example, at this moment it says that GBP New Zealand dollar is in a sell mode, and let's check what is going now. GBP New Zealand dollar, this is it. This is 1 minute chart. Okay, so but as you can see, if you take the sell mode when you are here and you go blindly, then you have a negative movement prior to a positive movement. So a very crucial and important thing to do is to analyze, once you have an analysis of the markets, what is going on with the price of that pair that you have selected. And think about the fact that if you are having this initial range and then you're starting to see a retracement, then you should wait or have also other elements of analysis prior to enter the trades. I'm basically saying that this engine that reads and tells me in real time what the markets are doing, not why the markets are doing what they're doing, is telling me what they're doing. Then I have to understand if that is the proper moment to enter, or I don't know, maybe reading the volumes, which in this moment are very little, or using other techniques like support resistance. Some of you are using indicators. There can also be the possibility to use some indexes, market indices for having a better idea or of what is going on for each country, like FTSE, like DAX, like NASDAQ. So there are many ways to approve or deny the sentence that is put here, because it can happen that the pairs that we are going to trade, they have already expressed the move, or they are ready to do that. Of course, you have always to wait for being on a ranging phase for then entering the trades, rather than picking up a trade when it's already doing the big move. But this comes with experience and by trading day by day and by having some period of practice that the majority of us do not do at all. So I think you can agree with me that the analysis of the markets, it's crucial to reduce the risk. We can trade by having a good analysis without money management, but I don't think, since my experience, that having a bad analysis and having a good money management can make us profitable traders. So my suggestion and invitation, in order to reply in these situations with a video to your emails and questions, is to make a daily effort to build your analysis based on principles that are stable, and math is very stable. It's just numbers, and if you do the same operation 100 times, the results are always in the same with the same meaning, okay, and the interpretation has to be always the same. And if by doing this the analysis leads you to this result, then you know that the step one, the market analysis is done, and then you have, it takes only that you apply money management to complete the operativity of a trader, which also has to take care of the management of the money that the trader has. Okay, so this example of more trades in more days on the same account, I hope gives you an idea that trading the market, it's possible by using an intraday approach rather than a swing trading approach. If you notice the swap column here, the values are always zero for the 90% of the trade. There was only one day that I basically took the orders open for 2 days, and you may notice here Euro GBP, GBP New Zealand dollar, GBP Swiss franc, but they are very few. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 trades on 191 total trades. Okay, so those trades were trades of few days. The rest was intraday. Also, the mentality of trading day by day, it's a kind of good exercise for not becoming rigid and to remember what you're doing and to get practice. Because if you trade not very often, you don't make analysis very often as well. And if you know that your trade depends on your analysis every day, it's more likely that sooner or later you will have a better understanding of the movements of the pairs. I know it's boring sometimes, I know it's stressing sometimes, I know it's mental fatigue that sometimes is not very rewarded by the profits, but keep going in these directions for those who are choosing the manual trading instead of the automated one. It's very necessary, and try to imagine that even if rather than trading one lot because I am lazy and I don't want to put the 0.10 lots, whatever, if I would have traded a mini lot 0.10 as a lot size, in 2 weeks I would have gained on 10,000 euros, I would have gained 4,000 euros. 4,000 euros on 10,000 euros in 2 weeks, less than 2 weeks. Don't you think is enough? And with a sizing of the lots of 0.10, it would have been even more money management friendly, the analysis itself. I would have lowered even more the risk without using stop loss lines that would have been catched immediately by the broker, because you have to give the time to a currency pair to develop and move and make its own oscillation. So these results are amplified and made in a way to test the quality of my analysis. Because by trading with propension to risk very high, if my analysis was wrong, I would have blown my account on the first day, but I did not. Can you imagine that by trading that lot size and having a bad analysis and bad trades, you blown your account in hours? But by risking that much, the method revealed that using math is the right way to approach Forex, which is made with numbers, as I say. And by using math, even with a very risky approach, the results that have been generated are impressive. Not using indicators, not using oscillators, of course, oscillators, I use them by creating by myself oscillators in my Excel spreadsheets. But I'm not using any kind of technical analysis in the conventional way we know by surfing the web and see the many ones that are claiming the most effective indicator available. It's just a matter of focusing on what you believe is right to do, and with math it's very simple. You measure from a close to another close, and then you put together the data of every currency pair, and then you build your currencies clusters, and then you go analyzing the currency clusters, and by doing that, magically you find out what is strong and what is weak. On that, you decide what currency pairs you would like to trade, and then you focus on the charts to have a better analysis of the price action that is occurring at that moment, trying to find out a good point of entry, of a good positioning point to place the orders. And you hedge by trading the weak against the strong. Once you've done that, you decide also what lot size to use and how much of your balance you are going to risk. And then you stay strict to that methodology, like if you were a computer, like if you were a robot. And results will come very soon because you are applying the same method again and again and again. So what I'm suggesting you is, first of all, if you are interested to approaching the Forex market by using math, to take a look to my previous videos on which I talk about this topic. I think that those videos are containing enough information, and in fact some of you are writing me showing their own Excel creations or approach to Forex with some statements and results by using math. And this is very encouraging for what regards my conviction and my ideas on trading and on Forex market. And so I think this information that is on my channel is already enough for you to start and to study. Of course, it's not that you watch a video one time, you will understand everything. It took me 4 or 5 years to understand something. What do you think you are? I'm not a genius, and I don't think you are a genius. We're all genius, and we're all not a genius. But what we can be, we can be good students. Apply study and discipline, practice at the beginning with a demo account, and when we are ready, attempt to do something on a real account with our own time and with our own knowledge. Okay. If you think that my videos are not enough and you would like to have some mentoring sessions with me, or think about having my tools, I think you better contact me privately via email or Skype and see if we can find an arrangement on that. But of course, believe me, I'm not taking in consideration like short messages on emails where I don't even know who is writing me, because you don't have not even time to write your name or tell me 2 words on what you are about. My time is precious as yours, and I cannot stay from morning to evening reading and replying to emails, because this is giving my time away for free, and this is not possible. But of course, to those are really interested, that are serious, that they are making their own path, well, I'm always open to see if there is a point of agreement. Okay, so I will evaluate this case by case. With this said, I conclude this session of unconventional forex trading. I really thank you for watching even this episode. I thank you everybody for your interest, for subscribing this channel, for the contacts that you are taking with me daily. And as usual, I wish you good space, good time, good weekend, and more widely, a good life. Bye.